Hello, my fellow trader. Welcome. Today we are going to talk about something very important, the foundation of all my trading strategies. It is the single most critical concept you must understand before you even think about placing a single trade. I am talking about market structure. This isn't about magical indicators or secret formulas. It's about learning to read the language of the market. That language is written in the patterns of market structure. So get comfortable, grab a notebook and a pen, because what you are about to learn will change the way you look at your charts forever. Many traders jump into complex strategies without mastering the basics. Think of yourself as a detective arriving at a crime scene. You gather clues before you accuse. Trading is no different. Your chart is the scene, and market structure provides the essential clues. It helps you understand the bigger picture before you zoom in on details. Without it, you are trading blind. Gambling, not trading. Our mission at New Blueprint FX is to cut through the noise and give you practical, no-nonsense knowledge that works in the real world. So, are you ready to unlock the secrets of the market? Let's begin. What exactly is market structure? In simplest terms, market structure is the way the market moves. It is the sequence of highs and lows that price creates over time. Imagine a river. It flows strongly, meanders, or pools. The market behaves similarly. These movements form patterns. These patterns are what we call market structure, the framework holding price action together. Why is this important? Market structure tells you the current state. Who is in control, buyers or sellers? If buyers are in control, bias long. If sellers dominate, bias short. Answering that question wins half the battle. Trading with the dominant force dramatically increases your odds. Fighting it is like swimming upstream. Knowing direction lets you filter signals. In an uptrend, look for buys. In a downtrend, look for sells. This simple filter can save you from countless bad trades. Market structure is your map and compass in the financial wilderness. It helps you anticipate turning points and position for high probability moves. Summary: market structure, equal sign sequence of highs and lows that reveal who controls price. Next, we'll break down uptrends. Now, let's break down the first type of market structure, the uptrend. An uptrend is where buyers push price higher and higher. Technically, uptrend equal sign series of higher highs and higher lows. Think staircase. Step up, then pause, higher low, then step up again. Break above previous high forms a higher high. Pullbacks that stop above prior lows form higher lows. The pattern repeats. As a trader, look to buy pullbacks near forming higher lows. Buy the dip within upward momentum. Selling in a strong uptrend is low probability. You're fighting the prevailing force. Recap: rally, high. Pullback, low. Break, higher high. Pullback above prior low, higher low. Repeat equal sign uptrend. Bias to the long side, look for buys. This is the fundamental logic to apply. Next, we decode downtrends. Take a moment to mark highs and lows on your chart. We'll continue with downtrends. Next, the opposite of uptrend, the downtrend. Sellers are in firm control and consistently push price lower. Technically, series of lower lows and lower highs, a descending staircase. Step down, small pause, lower high, then step down again. Repeat. Look to sell on rallies where a new lower high may form. Sell near resistance for higher probability. Buying in a strong downtrend is like catching a falling knife, risky and unsustainable. Summary: low rally, break below prior low, lower low. Rally fails to reach previous high, lower high. Repeat equal sign downtrend. When this pattern holds, your bias should be to the short side. Look to profit from declines. Now, what if the market isn't trending? Let's explore ranges. Pause your chart and mark recent highs and lows. We'll study ranges next. If the market isn't making higher highs or lower lows, it may be ranging, moving sideways between support and resistance. Think of it like a tennis rally. No decisive winner. Price bounces between an upper boundary, resistance, and a lower boundary, support. Two main approaches. 1. Play the range. Buy support, sell resistance. 2. Wait for the breakout and join the new trend. Playing the range can be profitable, but requires discipline and clear exit plans. Breakouts are the risk of range trading, but they also signal new trends. Wait for decisive close and confirmation. Always set stops. Have a plan if price breaks the range. Support, a price level where buying pressure overcomes selling. A floor that holds price up. Resistance, the opposite, a ceiling where sellers dominate and price turns down. When price breaks a level, that level can flip roles. previous resistance becomes support, a powerful concept to find high probability zones. These zones are where lots of orders cluster. Mark them as areas to watch for reactions. Trend lines are diagonal connectors of swing points. Ascending trend lines act as dynamic support, descending as dynamic resistance. Pullbacks to trend lines can provide excellent entries when aligned with overall structure. So far, we've covered ranges, support, resistance, and trend lines. If this is helping you, please like this video, share it with someone who needs it, and subscribe to New Blueprint FX. Hit the notification bell. I post new lessons every week. Tell me your biggest takeaway in the comments below. I read every comment. Now the practical part. Tip 1. Start with a clean chart. Turn off fancy indicators. All you need is price action. Tip 2. Use a line chart to get started. It simplifies swing identification. Then switch to candlesticks to refine entries. Use a zigzag tool or draw circles on swings. Mark the most recent significant high and low, then look further back. Pro tip. Always analyze multiple time frames. Trade in the direction of the higher time frame structure. Practice. Spend 15 minutes daily marking swings, drawing support and resistance, and noting market structure. Consistency trains your eye. Journal every trade. Every chart and trade is a learning experience. The process compounds over time. Trading is a marathon, not a sprint. Embrace the journey and stay disciplined. Challenge. Open your platform now, clear indicators, pick a market, and identify its current market structure. Quick summary. Mark swings, draw support, resistance, and trend lines. Trade with the higher time frame bias. These are the fundamentals. Thank you for spending your time with New Blueprint FX. I want to help you become consistently profitable. Subscribe, hit the bell, and check the next lesson in the playlist to continue your journey. Market structure is the cornerstone of your trading. Master it, and you will be miles ahead. See you in the next lesson.